Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Podcast, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today. I'm Nathan Hager, joined by Bloomberg's Valerie Teitel on the start of big bank earnings season. And so far, Valerie, it looks like a tale of two banks. Let's start with JPMorgan Chase. Solid all around. Good morning.
Yeah, some solid results for JPMorgan. The stock is only up by 0.7%, so just barely outperforming the market. But there were some decent results in this report for JPMorgan, the largest bank in the U.S. by assets. A big beat in fixed income trading revenue, Nathan, $5.7 billion versus the estimates of $5.2. There was a small beat when it came to equities. Trading revenue also was a beat in investment banking revenue and a beat on return on equity, coming in at 18% versus expectations of 15.1. If you looked at return on tangible common equity, it was a whopping 21% for JPMorgan. Also, loan loss provisions came in a lot less than expected. This is a sign maybe that JPMorgan isn't penciling in much economic weakness ahead just yet. The guidance also for NII came in above estimates. The full year net interest income guided at $95.5 billion versus estimates of $94.5. We also had some words from the CEO, Jamie Dimon, in this report saying that the U.S. economy remained resilient in the current quarter, saying that IB activity, investment banking, the deal-making activity started to slow but had recently gained momentum. There was a slight warning for the path ahead, saying that there are still significant risks that persist, including risks from tariffs and trade disruption.
And it's a different banking story, so far as we can tell, from Wells Fargo this morning.
Yeah, Wells Fargo, the stock had fallen as much as 2.7%. It's now down 1.2% in pre-market trade. This came after their second quarter net interest income missed estimate. It came at $11.7 billion. The expectations were for 11.8. So not a huge miss when it comes to that, but there has been a lot priced into this stock, a lot of promise priced into Wells Fargo after its asset cap was lifted by the Federal Reserve. It's even trading at a higher price to book ratio than some of its peers, such as Bank of America. So that slight miss on net interest income is seeing the stock getting, falling to the downside after that. They also cut their NII outlook on the back of this. They now see full year net interest income at $47.7 billion. The estimate was for $47.9 billion.
So,
Nathan.
okay, so while the focus turns to big bank earnings, there's still a lot of attention on Nvidia, and what it says is it's big breakthrough on China sales.
Yeah, big breakthrough, and it's seeing the NASDAQ futures trade at record highs as we're speaking. Nvidia up some 4.6% after it gets the okay to resume certain AI chip sales to China after dramatic White House reversal. They're preparing sales of their high-end H20 AI chips to China. This is a big win for CEO Jensen Huang, has been very vocal against these export restrictions from the White House. This H20 chip was originally designed to comply with Biden-era trade restrictions, but it's been banned for sale in the country since April. But this is a big win for not just for Nvidia, but for many of the chip stocks. We're also seeing AMD rise 4.3% and Broadcom rising 1.4% as well.
The Stock Movers Podcast from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.